It's easy to call yourself a trader, but it's very difficult to get to the level where you are a consistently profitable trader.
To create consistency in essence, what we have to do is learn how to trade without making errors.
Trading is a business. It's not fun time. You know, when things are going well, you can't be doing the happy dance.
It's easy to call yourself a trader, but it's very difficult to get to the level where you are a consistently profitable trader. And there's no shortcut. You can't buy a book, you can't attend a course, you can't listen to anyone. You see, you can't be taught anything. I cannot teach you anything. You have to decide to teach yourself. I can guide you, but ultimately you, in any endeavor in life, be it sport, be it politics, be it education, you have to want it yourself. And that's what separates the 99% with the 1%, the ones that truly dream and dare and go for their goals and their vision. And that's the Pareto principle all over.
What's the role of failure in learning how to trade or becoming a successful trader?
Well, that depends on your frame of mind. Do you run away from something? Do you run towards something? Failure is a compelling protagonist towards achieving your goals. So use failure, be scared, be very scared of failure, and you will succeed. The most successful minds in the world, they are profoundly scared of going bust, and they work double hard. There is no magic pill. Here in Las Vegas, you have a resident called Andre Agassi, and he was a tremendous inspiration to me when he slipped from #1 in the tennis world down to 173, and then made his way back up to #1. The only way you do that is through sheer grit and determination.
What I think are the best traders in the world, most of them are not common names. They like to be quiet. They're trading large amounts of money. They don't want to be followed. But that being said, they do share common traits, which the biggest thing is they have set rules. They know themselves intimately. They know their strengths. They know their weaknesses. They never break their rules when they do. They take a time out, clear their head, get back to business. This trading is a business. It's not fun time. You know, when things are going well, you can't be doing the happy dance. It's all about, adhering to the rules and never breaking them. And I've seen some traders that have worked for me. When I ran stuff at institutions, ran large trading desks, you'd see guys lose their edge and lose their ability to manage themselves and completely fall apart, and never catch it again.
You know, what's the experience of people when they begin trading and they've never done it before? Sit down on their computer at home, type into Google, learn how to trade. What comes up first? Well, on the SEO, on the left-hand side of Google, it's all brokers, and they've all got a conflict of interest. And on the right-hand side, you've got paid search, where people are paying for you to click on that. Why? Because a certain percentage of people who click on that pay them enough money that they can do it again, right? So you've got to be careful. You know, you're not going to learn how to trade by going onto Google, typing in learning how to trade and going on 20 courses, 20 free seminars. What you're going to learn is a load of rubbish that will never make you money. And then everybody goes and puts money in their trading account and blows up, and they wonder why. And then they sit there for a year, save up some more money, and then do it again. And they never actually seek out a proper education. So that's why.
The biggest advantage of a tested strategy is actually the process of defining the strategy in the first place. Because too many people, when I speak, and this is once again my value of having taught traders, that they say, here are my rules. And then when I watch how they implement them, they actually say, well, I didn't do that one because of that, and I didn't do this one. So I said, well, where's that as part of your rules though? So you're actually discretionally bending the initial rules that you wrote down, because you're not actually trading your actual system in terms of how you defined it, or you're actually adding a new level of rules that you haven't yet incorporated into your rules. So one or two has got to happen. You've either got to stop messing with what you originally wrote down and trade what you've defined, or if that's what you think is an important criteria, define that criteria and reintegrate it into your system. So what you actually find is you start being forced to make decisions about what you really want. You can't get what you want in life until you define it and can write it down. So in the same way in trading, you have to say, I'm going to have to let some of those trading patterns go. I quite like them, but sometimes they really sting you. They go the wrong way. And when they do that and that, it could be good, but it could be bad. Let's just focus on the ones that give me the results that I always need. And you're being forced to eliminate and to define. That process of defining the system is the most valuable part for me.
Day traders have it all wrong. They see the market run up, they sell it. It comes down, they buy it. It runs up, they sell it. It comes down, they buy it. It runs up, they sell it. And then, whoa, prices take off and they sell and they lose money all the way up, not realizing the only way you make money in the market is to catch a trend. It doesn't matter if you're a day trader or a long-term trader. Trend is the basis of all profits. You need a trend. Now, we also know this, if you study your charts, you'll see that all large range days, or almost all of them, close at their high or close at the low. So the most successful day trading strategy is to hold to the close. Don't try to dance in and out, because when you have a loss, you're going to have a big loss. Try to catch a trend move, hold to the close, and you're going to make a lot more money. You'll become a successful day trader.
I'll be, let's say, paralyzed to do anything, and I just sit and watch as the market takes my money away until something snaps inside of my mind, so okay, that's enough, and I get out. And then I look back at my equity and I see one of these huge drawdowns, okay, and I think, oh my God, how did that happen? Now, if you don't understand the underlying dynamics of what I've just talked about, you're gonna go look at the market, and you're gonna try to find what happened in the market that caused that. What set of variables, what set of market variables caused that to happen? You see, the market didn't have anything to do with it. Nothing. To create consistency, in essence, what we have to do is learn how to trade without making errors.
That you have an idea of what it looks like when it works, you have an idea of what it looks like when it fails, you have an idea of how much risk you should take on this trade, you have an idea of how patient you should be with this trade, and it's a simple thing. All we have to do is count the number of periods from the beginning of the trade to the end. So in a clean trade, if you and I know this trade may last 2 weeks, well then we know if we're going beyond 2 weeks and this hasn't done anything, again, we're probably in a hope trade, and it's probably not going to work well for us. So we want to understand how patient we should be with the trades. Oftentimes, I see traders getting into a trade, waiting for something to happen. It doesn't happen, then they get out, and then for sure, when they do that, it's going to happen. It's going to be in their favor. But one of the reasons why they have a tendency to do that is they're not sure how much time to give that trade. So whether we're talking about a day trade or a long...
You've got to have a lot of discipline. Discipline is one of the biggest factors as a day trader, because you have to have the discipline to be able to sit on your hands and have that discipline to sit back and have the patience to not force it, not impose your will onto the market, because sometimes the market just isn't giving it to you. You've got a certain kind of style, but the market on that particular day is just drifting sideways. But your style might be, you're a trend-based trader. So don't try and force it to try and think, oh, well, it's going to break out and there's going to be a trend today at some point. It's not always the case. So discipline in many factors, the discipline to be able to sit on your hands and not take trades, the discipline to not revenge trade after you've just had a losing trade and not think, oh, I've got to go straight back into the markets.